Pushpin Singh is managing economist at the Centre for Economics and Business Research. Pushpin, thanks for joining us on the programme. Many analysts say Europe diversifying away from America is impossible. Is it?
Well, it's a big question, isn't it? Well, you're starting to see a shift right now. I mean, what we're seeing in terms of the Danish pension funds selling away treasury, we are seeing China as well being a net seller for treasury bonds as well over the last 9 months, almost close to a year now. It's more of a structural shift away from the US being a safe haven more generally. So it's more of a repricing of concentration and risk in light of what's happened over the last 12 months or so. But at the end of it, the US is kind of the most in-depth, has the biggest capital depth, it's such a big economy as well. I suspect it's going to be a struggle for any continent, less so Europe as well, to divest away from the US entirely.
Now, Donald Trump saying the US has all the cards, but there was backtracking over the tariffs on Europe over Greenland. So does that suggest that the US is worried about a potential Europe sell-off?
I wouldn't be surprised, actually. It's definitely there in the calculus of every decision-making that President Trump and his administration are doing. I mean, the tariffs have had a negative impact on the U.S. economy. You might not see it in the headline growth rates, but you can see it in kind of the wider consumer metrics that you're seeing. Consumer confidence is low, prices are rising, and inflation is still elevated. And, there will be a pushback in terms of the political game and the political side of things, and we've seen it as well with the midterms, whereby the Republican Party lost out on quite a bit. So there is a concern on that end as well. And it doesn't surprise me that tariffs will roll back for Greenland.
We've seen some examples of this sell America trend over the last few days. What are you hearing from investors about sentiment?
I think very much broadly echoing my first point, actually. I think, as I mentioned, there definitely is a structural shift happening in the investment climate. I wouldn't necessarily say it's a shift away from America in terms of companies and investors are just looking to move out from America more generally. It's just a repricing of risk and concentration. You're seeing a lot of uncertainty right now, and it's not uncertainty like you can, in a sense, that can be modeled. You have almost erratic decision making, tariffs being rolled out left, right, and center, and then along with that, you've got metrics like the US dollar rising, treasury yields elevated, and almost at levels seen at the global financial crisis. All of these make up a very dangerous economic cocktail for risk premiums, whereas previously treasuries were considered safe haven. So it's no surprise to me that investors are looking to kind of shift away from this additional risk premium involved. That said, you're seeing investors still putting in money in the AI rally as well. So there's certain pockets of the US economy that are still doing well, tech stocks, Silicon Valley, etc. So it's one of those whereby, investors are really just looking at the risk premium involved and the risk more broadly as well. And the US is coming out as a much more riskier asset per se, in terms of the grand scheme of things that are happening over the last 12 months.